It is time for a single best chart, and we look at the optimism. Fun to do on a Monday after the gloom of the weekend, all the different blogs writing up end of the world. Steve Eisman with us with Neuberger Berman. We've shown this many, many times before. The banks, the U.S. banks, JPMorgan ascendant, Wells Fargo with a pause with some challenges. Bank of America coming up nicely, and Citibank just going nowhere. Is Citibank a value trap? Or is that where you want to go now within banking?
Oh, it's absolutely not a value trap. It's up about 25% this year. I should own so many value traps.
But the others do better. Do you want to get on board with a Citibank, or do you buy something that's steamrolling forward?
Citibank this year has actually outperformed. Okay. Now, over the last couple of years, it's underperformed, but this year it's definitely outperformed.
Where in the income statement or balance sheet does the optimism come from Steve Eisman?
You know, it's funny. This earnings season is amusing in the sense that it's probably the most irrelevant earnings season in all the years that I've covered the banks, because it's just not. What's important is that there's a new cop, and that person has just been taking the seat for vice chair of financial supervision, and you're going to start to see some deregulation of the banking system.
Is the FIC declines sustainable, or do you look at it as a one-off? Are the trading declines 22%, 27%? Is that a one-off moment, or is there some permanence?
It's definitely not one-off. This has been going on for several years. One thing that could change it is my expectation is that the Fed will start to reinterpret the Volcker rule, and you'll see a loosening up of some of the Volcker rules, and you'll get some more fixed income trading out of that.
But Steve, if you look at normalizing central bank policy, does that help the banks actually quite significantly? Because it would imply the return to volatility, and therefore you can make money easier. Maybe not easier,
The most
but
important
more.
thing for the banks in terms of earnings, other than the deregulation that I just spoke about, is higher rates. Anything that normalizes rates helps. It helps trading. It helps net interest margins. It's good for everybody.